Hey, what's up, guys? This is the UFX. Welcome back to my YouTube channel. Welcome back. Good morning, good afternoon, good evening, wherever you're watching the video from. I've been getting a lot of DMs in my WhatsApp, also my Telegram, a lot of demand about supply and demand, and that is basically what we'll be talking about today. So that's basically what we'll be talking about today: supply and demand, supply and demand, supply and demand. So, what is supply and demand? That is what we are going to be talking about today. And then you'll be able to make use of this whenever you're trading. It will be a lot more easier for you. It will be more flexible for you to use this when you're trading. So when you're trading using supply and demand, there are more other things you need to take note of, and I will be telling you what you need to note and what you need to be careful of. Understand? I'll be telling you what other things that has to do with supply and demand. You don't just use supply and demand alone. It doesn't stand alone. There are a lot more things attached to supply and demand. So before I tell you more things attached to supply and demand, let's talk about what supply is and what demand is. Supply is when you have a zone where you have more selling pressure. When you mark out a zone and you discover there is more selling pressure in that area, then that is just a supply zone for you. That is a supply zone for you. That's just basically that's the basic definition of supply. Supply zone is where you have more selling pressure in that area, which is telling you you need to look for more opportunities to to sell the market towards the downside, which is telling you to look for more opportunities to sell the market towards the downside. And then talking about demand zone is quite the opposite. Demand zone is where you have more buying pressure. Demand zone is where you have more buying pressure. Take note of these things. There are two different things and you don't mix it up. Supply is where you have a selling pressure for you to look for more sales towards the downside, and then the buy zone is where you look for more buys towards the upside. It is where you can discover there is a lot more buying pressure in that area. That is just the difference between supply and demand zone. And for you to be able to use this supply and demand zone, there are lots of more things attached to these things that you need to take note of. You don't just use supply and demand all by itself. You don't use it all by itself. So this is how you are not going to use it all by itself. If you are going to be using supply and demand, you need to understand the direction of the market. You cannot run away from this. As a trader, you need to be able to interpret what the market is telling you. You need to understand what the market is doing, and you need to understand, okay, this is where the market is going. Even if you are not 100% correct, at least you understand what the market is doing. Yeah, as a trader, you definitely doesn't know what the market is going to do. You are only trying to you are only trying to identify this is what the market is doing based on what you're seeing on the chart. Based on what you're seeing on the chart. You understand? Based on what you're seeing on the chart. You understand? So, for you to understand the direction of the market, that is when the market structure comes in. I will be making another video for how you can identify what market structure is all about. But for now, we'll be talking about supply and demand. So if I'm going to be talking about the direction of the market, I can't throw away the market structure. I'll be making video breaking down what market structure is. But for now, I will tell you market structure is just a concept that tells you the exact trend of the market. It tells you the exact trend of the market. When you have your higher highs, higher lows, higher highs, higher lows, it means it is an uptrend. And when you see lower highs, lower lows, lower highs, lower lows, it is telling you the market is in a downtrend. You understand? And then when you have continuous equal highs, equal lows, equal highs, equal lows, it means the market is ranging. So if I'm able to understand the direction of the market, it will tell me, okay, if I'm going to be using more of demand rather than more of supply, or if I'm going to be using more of supply rather than demand, yeah, So it's just either ways. So I don't go into the market saying, okay, I'm going to be using demand, I'm going to be using demand for today, I'm going to be using supply today. No, 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 no. It's not done that way, bro. Whatever the market tells you is what you're going to do. You understand? If the market is telling you I'm going towards the upside, it's better you look for demand zone to keep on buying the market towards the upside. So that is that. You need to understand the direction of the market, and then what you need to take note of is, am I late? Am I discovering this thing at a late time? Because there are sometimes you need to wait for hours, for days before your setup is totally built up. Before your setup is totally built up. You understand? Sometimes it's just what the trading has to take from you. It takes patience. You might probably be having one good setup, and you have to wait for it for probably few days, few hours, few weeks sometimes. It depends on the kind of trader you are. Like there are a lot of traders. You have swing traders, you have position traders, you have scalpers, you have day traders as well. So it depends. And these things is what blends into your supply and demand zone. So once you understand the direction of the market, it helps you to know whether you are going to be using more of demand or more of supply. So take note of that. For you to be able to use supply and demand, you need to know the direction of the market. And if you want to know the direction of the market, you have to pay attention to market structure. You have to pay attention to market structure. You understand? So if you know the market structure, good, it is perfect. That is where you can be able to mark out your supply and demand zone. And there's one particular thing we cannot do without talking about, which is liquidity. Like I said, liquidity. In whatever market that you are trading, liquidity is always present. Liquidity is always present. Liquidity is always present. And it is even more important for you to understand, or it is even more better for you to be able to identify where liquidity is standing. If you understand where the liquidity is standing, you won't be part of those people that get stopped out before the market moves towards the upside. A lot more times traders get caught up in a liquidity point. You understand? It happens like that. That is why it is a lot more better for you to like mark out liquidity side. You can have liquidity buy side, you can have liquidity sell side. That is why you need to be able to identify a lot of things. I'll be breaking everything down for you. But today, in this video, I'll be talking more about supply and demand. But if I'm going to be talking about supply and demand, like I said, I need to talk about things that is well not attached to these things. I need to talk about things more well attached to these things. That is why you will be able to get more ahead of your trades. You understand? So, what is liquidity? What do we know about liquidity? What do I want to tell you about liquidity? Liquidity is where money is resting, where the money is resting. You understand? Where money is resting. Especially, it more indicates where the buyers took control or where the sellers took control. And at that exact point where you are able to identify whether this is where the buyers took control or this is where exactly where the sellers took control, that exact point is where we call liquidity. That area is where we call liquidity because there's a lot of more money in that area. So when you understand there is a lot of more money in that area, you understand that, oh fuck, I need to go along with the trend of the market. And I will be identifying where liquidity lies, how you are going to be able to spot the trend of the market, and how you are going to use supply and demand zone. So guys, let's dive into the chart. Let's not waste time. I've tried breaking everything down by what, you understand. I will, it, because it is very crucial. I say it, and then after saying it, then we practicalize it. It is what is going to make you grow. So I can't just dive into the chat and then you be like, keep on talking and talking and talking. No, it's not so. I'll be using different kind of pairs today to explain to you. So I'm currently, let me go to 1 hour. Let me go to daily time frame. Let me go to daily time frame, and this is where I'm going to daily time. I'm going to daily time frame. Yeah, here is why you need to understand. You need to like analyze your market from the higher time frame down to the lower time frame. Here is why you need to get the overall trend of the market. You understand? You need to understand what the market is doing in the long run. What the market is doing in the long run. So if you are able to, if the higher time frame is telling you, oh, I'll be going for a buy for a very long time, then you discover that for that particular time you will be doing more of buy towards the downside. You'll be doing more of buy towards the downside. This is purely technical analysis. This is not about fundamental analysis. Fundamental analysis comes in before you take your technical analysis. Let me remind you of that. You cannot throw away fundamental analysis as well, because a lot more times it comes to more of the times some fundamental analysis tells you what the market will do in the long run. So that is why you cannot throw away fundamental analysis. I keep telling people in my community you can't throw it away. I keep on emphasizing that fact because of the journey I've been through as well. I lost a lot of money not being I lost a lot of money not trying to understand what fundamental analysis is all about. I lost. There was a time I had back to back losing streaks in a week. I lost majority of my profit in that exact week because I do not understand what the market is doing in the long run. There was a time there was a time I think it has to do with like a particular geopolitical event that happened around that time that I never took care of. I wasn't paying attention. I was just basically trying to say, oh, let me be focused on my technical analysis, and then I discovered I'm losing back to back. So because of this reason, I want to really like my students to get caught up in this kind of situation. Although it's sometimes not avoidable, but it won't eat you as bad as the way mine is. Mine was actually. So that is why I'm starting my analysis from daily time frame. So I'll be analyzing the market with you as well, even though I'm trying to explain. So analyzing the market from the higher time frame, which is I'm starting from the daily time frame because I majorly start from daily time frame. I'm a day trader, actually. I'm a day trader. So this is what the daily time frame is telling me. Number one, as you can see, for the past few months, few weeks, for the past few months ago, the market has been bullish. The market has been bullish. The market has been bullish. It is quite obvious right here. You have the higher high, you have the lower higher low, you have the higher high, higher low, higher high, higher low, and then as you can see, majority of that indicates it's in an uptrend. And then it's got to exact point where the market started ranging. It started consolidating. So as you can see, I'm able to understand what the market is currently doing. Right now on daily time frame, the market is consolidating very, very bad. It is not giving a clear uptrend. It is not giving a clear uptrend. So that is what the market is doing on daily time frame. And then even though it is ranging, it will be a lot more different for you in a lower time frame. It will be a lot more, you will be seeing another thing entirely in a lower time frame. You understand? It will be different when you go to a lower time frame and you are going to understand. But for now, I need to let you know that you need to mark out your key levels on higher time frame. And what is key level? It is me literally trying to identify where the liquidity is standing. Here is a point. Here is a point for me. Here is a point where liquidity is resting. As you can see, the market pushed towards the upside and it went for pullback. As you can see, the buyers lost control right here, and then you can indicate the seller took control in this area and then pushed the market towards here, and then again the market start buying towards the upside, which means the buyer took their control again and then pushed the price back up, creating another new high. And then at this exact point again, the sellers took control. As you can see, you have a long wick. You can spot a liquidity by seeing what we call wick, a candle wick, a candle wick. You can spot liquidity when you can see a candle wick. And what is a candle wick? It's just like a tiny line attached to your bottom or attached at the top of a candle. At the top of a candle, it is like a long tiny line that you can spot either at the top of a candle or at the bottom of a candle. The longer the wick, the more better, the more valid the liquidity is. As you can see, if a daily if you can spot a wick like this on a daily time frame, it means there is a huge money that was present here that pushed the market here, and then the buyers tried to push it again, and then it's dropped back here, and then the market started ranging, going back and forth, no clear trend on daily time frame. So this is what literally I do on my chart. This is literally what I do on my chart. I mark out the key levels that I need. So I know if the market is coming here, I know if the market is going there. So since I've mapped out my liquidity, I've mapped out my key zones where I'm interested, where I picked interest. Then the next thing for me to do is just to go to the lower time frame. And then before I go, I need to make you understand a lot more things attached here. As you can see, the market moved here, dumped back here, came back to this selling area, pushed back down, came back again to this selling pressure, pushed back again, and then pushed back to this selling pressure again, dumped back here. So as you can see, this is a clear example of a supply zone. This is a clear example of a supply zone where you have more selling pressure, where you have a lot more selling pressure. As you can see, when the market came to this selling pressure, it dumped back. It came back to this selling pressure again, dumped back. That is to validate why supply and demand is very useful for you. So if you are noticing the market is moving towards a supply zone, then you need to consider, oh, let me look for opportunities to sell the market. After you have your confirmation, you understand? So since I've mapped out a supply zone, I will need to mark out another key level zone for me where it is very crucial. I have another demand zone here. As you can see. There are two different zones I noticed on the daily time frame right here. This is number one zone where the buyers keep taking control. Kept taking control. Right here, right here, right here, right here. And then you have another demand zone right here, because this is a major supply zone that turned into a demand zone right here. Mind you, a supply zone can turn into a demand zone in a market. and I will explain this later on in the chart. So let's move down to 4-hour time frame. As you can see, moving down to 4-hour time frame, you see a lot more candles being present. And as you can see, this zone I'm marking out is still very useful right here. As you can see, it's still very useful. As you can see, it's still very useful. And then if you mark out your major zones in your higher time frames, it doesn't mean it will not be effective on lower time frame as well. You need to mark out another zone that you are seeing in a lower time frame to blend in with the type of trader that you are. You might probably be a trader, you might be a swing trader. It depends on the kind of trader you are. So moving on to 4-hour time frame, as you can see, the market has been ranging, but we can spot here the market was in a downtrend right here, and then it changed, tap into this liquidity zone, pushed towards the upside, and kept on pushing towards the upside. And then it tapped into the supply zone, pushed down again, and then it tapped again into this zone right here, and then pushed towards the upside, So this is literally how supply and demand is going to help you. This is literally how supply and demand is going to help you. Like I said, liquidity is very important. Like I told you, this is an example of liquidity. 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 This is another example of liquidity. This is an example of liquidity created not long ago by the market. So since I've understood what the market is currently doing on XAUSD, I'll be able to understand, okay, what is currently going on. So right now, the market is not exactly telling us its exact direction it's going. Gold is currently just kind of ranging, kept on pushing towards the upside and downside, contemplating. It's not making a decision yet. But we are going to do whatever the market is doing. We can't push it. We can't force it. It's going to do whatever it's going to do. So let me go back to 1 hour time frame. As you can see, the market right here has been bearish, and then it's changed its trend. You can spot a change in trend in when you can identify market structure. If you understand what market structure is, you'll be able to understand if the market is changing its trend. You have a lower low right here, and then the market was not able to make another low, which makes the market telling us, I'm changing my trend. Because normally, if this trend was is supposed to, if this trend was supposed to continue its trend, it's supposed to create another new low. You understand? Another new low, but it couldn't do that. Formed a lower high right here, a higher low right here, and then broke this structure towards the upside again, which is clearly telling you gold is bullish on a lower time frame, mind you. And then again, after it went up for a while, gold dumped back into this zone, And what is this zone? This is a demand zone I mapped out right here. This is a demand zone I mapped out right here. So if I'm able to identify that, that is how I clearly take my trade. Yesterday we took a trade on gold. It went well, but not well entirely. It just gave us TP1, TP2, and then went and tapped into this zone. And then as you can see, there is a minor zone right here where the market kept on using this one to push towards the upside, and then it broke, tapped here, and then used this one to push towards here again. So this is basically how you are going to make use of your supply and demand zone. If you need more questions, drop your questions in the comment section. I will be able to make more videos. This channel is dedicated to like giving you the best and top-notch lessons that you can take on trading. So I hope I have explained what supply and demand zone is. I hope I have explained. This is literally how you are going to mark out your zone, and with this is how it is going to be useful for you. So right now, based on what I have explained so far, if you are going to be using your supply and demand zone, you need to take note of the direction of the market. And I will be able to tell you the direction of the market right now. Now, from here to here, the market has been bullish, and then it's changed its trend. What did it do? Broke these continuous structures, which is telling us market is now bearish. And then we are taking a buy right here because of the valid zone we are looking out right here. Hoping the market will tap into this supply zone, and then we will continue looking for a sell. And then as you can see, it hasn't completely tapped into this zone, and then it's already reacting as if it's going to push towards the downside again. But I'm not going to panic. I will wait for my confirmation before I take another sell on gold, because there's more probability that US dollar is going to keep on gaining strength. And then there's a particular concept about gold and US dollar. If gold is very, very strong, expect a huge dump on gold. But if US dollar is weak, and then that is when you see gold firing up towards the upside. That's where you see gold pushing towards the upside. You understand? So if I'm going to be trading gold today, I'll be looking for gold to tap into this zone, give me a confirmation that okay, I'm going down again, and then I'm going to continue the trend. Just going to keep on dumping gold, and probably if gold dumps back here, then you are going to look for opportunities to buy to another supply zone, and then in that supply zone you look for another opportunity to sell. The market is not always there like that. All you just have to do is just follow what the market is telling you. You understand? So that's clearly what supply and demand zone is. So if this video has been useful for you in one way or the other, please click the subscribe button, click the like button, and then click a notification bell, which is going to tell you when I'm going to be dropping my next video. Like I said, I remain Nayo FX, and then trust me, I'll be giving you more content that is going to help you grow. Understand? So I think I've explained more things on this video which is going to help you. So this is how it works. And then mind you, don't give up on trading. Don't give up. I've been there. There are times I felt like I need to give up, but you know, when you have more bigger passion pushing you to make money, you just don't need to give up. So I didn't give up, and now I'm making money. Even though I'm not making huge amount of money like that, at least I'm making money, living my life, affording whatever I need to afford. You understand? And slowly I will acquire what I need to acquire. I'm not rushing. I'm not rushing trades. You won't. It will get to a certain point. You will discover you don't need to rush trades as well. You will discover that. Believe me, you will discover that. You understand? So take note of that, and then it will be up for you. Peace out, guys. Mind you, don't give up on trading. Trading will get you there. So stay well, cool, guys. I remain FX. Bye.